Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well, safe and sound. It's been a long week on a number of fronts. I think the most obvious has been a lot of weather, especially down here in Florida. So hope everyone's doing well. It's been a long 3 weeks in the equity markets, because if you think about where we've been stuck since the 20th of September. So we're coming up on just over 3 weeks of this back and forth in this range. And even though it looked promising that on the 9th we were able to get through some resistance, you can see here the high from the 26th at 58.30 continues to be really where buyers, bulls, are struggling to keep prices supported and then moving higher from. Ultimately, what we've got is just continuous channel. I don't even want to say chop. We actually spent some time yesterday in the Sector Secrets Mastery talking about what is the difference between channel and chop, and it's the distance between the support and resistance. So when that distance is quite narrow, in this case, it's just over 100 points. When it's really narrow, there's not a lot of follow through, because right about the time it feels that we've got traction, we run into support or resistance, whether that's for a breakout through resistance or a breakdown through support. And then when it seems that we might have a breakout, we don't seem to get the follow through that we need. Now, I will say, it's not that it's without direction, right? As far as direction goes, there's no confusion here, right? So what we want to do is rely on the tools that are on our screen, the things that give us an edge, that give us a process, right? That's why we have indicators. And if I take a peek here, what I know is that we've had very consistent green candles, right? Very consistent green candles since the beginning of September. Yes, we've got that support and resistance zone with this Darvis here. So this would be typically a Darvis box. I personally like to look at the Darvis without those horizontal lines, because they tend to cover up the wicks of the candle. So I leave them as a channel. And these aren't strictly Darvis boxes. They're definitely using some of the process that Nicholas Darvis discovered in the 50s, and we modernized it, because Nicholas Darvis was essentially a 52-week breakout trader, which nothing wrong with that, but it's not necessarily the way I want to operate. But there's some very cool price patterns that create that consistency of, hey, is there support and resistance there, or do I want there to be support and resistance there? That's the difference between objective, unbiased levels and just sort of connecting the dots that we want connected when we're already bullish or when we're already bearish. You give a chart to a bear, they'll find resistance, they'll find a downtrend, they'll find a reason to sell. You give a chart to a bull, same thing. They'll find support, they'll find an uptrend, they'll find a resistance, a reason to buy. So our bias is going to obviously play a large role. So the more that we can remove that, because the automation of a charting platform, this is Thinkorswim. The other one that I use is TradingView. The automation means it doesn't care. It just is what it is, regardless of that bias, regardless of thinking, oh my gosh, I'm long basic materials. What are all the reasons to stay long, right? So this is very much something that was highlighted to me in a great book over 25 years ago called What I Learned Losing $1 Million. And it's a great book by Moynihan and Paul. It's two authors. You can find it on Amazon today. Kind of a big credit goes to Tim Ferriss for that, by the way. This book was out of print for a very long time, and he brought one of the authors, I believe it was Paul, I don't remember, maybe Moynihan, but he brought one of the authors onto his extremely popular podcast, and then lo and behold, not long later, the book was back in print. Otherwise, you were spending a few $100s to get an out-of-print copy. Pick it up if you haven't ever read it. It's a unbelievably readable book. It's a story about a trader who was in a trade where he thought a very famous other trader was on the other side of it, and all the mental errors he made on the way to losing actually more than $1 million, but definitely something you want to read. What we need to do is trade the market we have, not the market we want. And the one that we have is stuck in a channel. So if you've been looking at the last 2 or 3 weeks saying, gosh, Rog, I was actually doing better in the trading through the chop and sometimes the chaos of September than I am right now, and realize chop is okay. Chop is at least a distance from the support to resistance. Channels are really, really difficult. All right. That said, as always, if you have any questions, feel free to type them in. And let's see what else we have here. I'm going to jump on over from crude to another symbol. It's another futures contract. We do futures in the mastery. It's not the main. It's not the main focus, but when we're looking at pre-market, remember, gang, we're looking at really futures contracts because they've been trading for many, many, many hours before the Wall Street bell. So taking a look at what's happening here on crude oil, we continue to struggle with getting above basically the resistance of about 78.50, starting at about 77. There's about 1.5 points where we got previous highs at about 77.60. Notice once again, Darvis, and 77.44, 45. We need to get above those levels, and here's why. First of all, we've got bullish momentum and a bullish environment really starting. It's new, it's vulnerable, it's pretty fresh, it's unestablished, it's on a trend. But if we can get above those levels, what will continue to happen is the strength we're seeing in oil services, in energy, in oil and gas explorers should be able to follow through. Keep an eye on XLE, keep an eye on Exxon, and keep an eye on crude oil through that level. This is really what the sector rotation has favored thus far in October, meaning there was a lot of profit taking in things that were very strong in October. Probably two that come to mind most vividly would be Staples, XLP, and GDX, gold miners. So we've seen a lot of flow out of what was performing very well for, in some cases, the last 2 months of the third quarter. Both August and September showed a lot of Staples and gold miners strength, utilities strength, although utilities are still pretty strong. But there's been some flow out of certain outperforming names and into some underperforming names. And that's what sector rotation is, right? Where is the profit taking? Where is the bargain hunting? Let's just talk about it for what it is. And that's exactly what it is. So we want to keep an eye. It's not quite there. So what would be there we go, the Q? Sure. So what I'm looking for is continued resilience over these set of dots, continued green candles. You can see we're dominated by these green candles. So continued green candles. We have bullish momentum, and now I'm waiting for this lower row to get the bullish trend. And that's really what I'm waiting on. So when everything that I've been doing manually, sometimes cumbersome, is cumbersomely, can we turn that into an adverb? Is cumbersomely a word? It is now. It's a lot of things that I did were very cumbersome. I used to manually calculate a Z-score, right? These are all things you can do. I used to manually calculate my hourly price movement ranges and my daily price movement ranges. I used to manually calculate a simple moving average. If you want to go way back to 30 years of just sitting down with a calculator and so almost everything that I used early in my career was different levels of open, high, low, close, and basic, literally fourth grade arithmetic, which is shockingly what most indicators are. There's no algebraic, there's a very few sophisticated mathematics going on your typical indicator, right? So knowing that, as charting platforms got programming that was something I could understand, whether that's easy language for TradeStation, ThinkScript, Pine Editor, I started learning, and I'm terrible, but I can kind of get through it. I started coding things that I used to do manually, right? So everything that's on my chart to some degree can be done manually. But now that I don't have to think about sitting down with pen, paper, and calculator and putting all this in a 3-ring binder, which is what I did for probably the better part of a decade, maybe almost 2. Now I just say, look, platform's going to do it for me. I've still got to come up with a formula. I've still got to come up with a theory and the way it's going to happen and why, right? And then I'll just let this thing, which doesn't need to eat, sleep, rest, crunch the numbers, for me. And so really what it is a successive number of moving averages that are just in the right organization. And then because now I don't have to sit around doing this by hand, I can factor in other things, not just price, which is super easy to sit around and calculate. But now I'm going to look at what I like to call participation, right? What's the attention? What at this price is happening? Is it 10 people? Is it that 10,000 people? That matters. Price is super important, but running a very close second to price is, well, how many people think that's an important price? And so we start to calculate more and more things that are slightly more sophisticated, because now I'm not burdened with the task of crunching these things by hand. Same thing with the hourly price movement ranges. I used to crunch those things by hand. And I'm really very much an old school trader that's taken a long time to adopt letting go and letting the platform do it. But I'd say over the past 10, 12 years, this last third of my career so far, I've been really just saying, look, it's better. It's less exhausting. It's quicker. It's more accurate. And I've really embraced that idea of taking the things that I would know and do manually and then automating it. So the start of that would look like that. And that's why I would wait for certain moving averages to align, certain participation to come in. And then the colors change, because I don't need to see all this spaghetti across my screen unless the output has to be dots or zones like this. If I could just reduce it to green means that criteria now is bullish, gray means that criteria has now lost either the bullish or bearish validity, or that pink color means the criteria is now bearish. Now I can reduce it to just a single, very easy to recognize visual. And that's what I do, Jess. Yeah, that's what I do. All right. Next up is, let's see here. What platform or website do I use to track your sector performance? Eon, I use Koifin. You could use Sector SPDRS. Those are two of the most popular ones that we use in the mastery. I'm sure there's plenty of them. There's a heat map on TradingView. There's a lot of them, but the two that I like are Koifin and sectorspdrs.com. All right. Ren is asking about Natty. Oh, Natty is not on my good list right now. Not natural gas futures, but UNG. Now, there's a funny thing that I've noticed that happens sometimes with the ETFs tethered to the futures contracts. UNG and Natty would be one of those connections. UNG lost premium value in a way that's really disproportionate to the volatility and the time decay on the UNG calls that I had. So I got shaken out of them. Small paper cut, not max debit or anything silly like that, but I took a tiny loss. And a lot of trading is tiny losses, right? That should be my next book, Tiny Losses, how to take a tiny loss. So I took it and I had to get out. Do I like it still? Do I like Natty Gas? Yes. If I do natural gas again, I might just go with the futures contract, because this was still a valid trade. It just disconnected a little bit. And that's one of, and it doesn't happen often in the indices, but it does happen a little bit more often in energies for reasons that I can only guess have to do with the weighting of different contracts that are represented in the ETF, because they're not always the front month that I'm looking at to set up the trade. It usually will, for the most part, track with it, but sometimes at UNG it didn't. So I'm leaving that one alone, because there's really ultimately, there's really a, for the most part, sympathetic move with the ETFs and the futures contracts. And so sometimes they disconnect. That's why we have stop losses. We'll recognize and move on. All right. Next up is Hoogly Boogly asks, due to my job, I can't day trade. That's okay. Is it possible to pay $2.97 a quarter and okay. Can I paraphrase your question here, Hoogly Boogly? Rog, I got to pay you to be in your room, obviously. Yes. So let's tackle the most obvious. Whether you're coming in quarterly or whatnot. I don't think it's $2.97 quarterly, by the way. Is it possible to pay $2.97 quarterly for the swing trade. Oh, do you want to pay less? Oh, okay. That took a second. No, it's not. There's no way for me to break it down and separate out certain trades to certain members. No, it's a full service room. But let me mention this. So Hoogly Boogly's asking, can I have a discount? My mom says can't hurt to ask. So here's my answer. Hoogly Boogly, every day for an hour, we day trade. If you watch my last webinar, and if you're here, I'm guessing you did, right? Did you notice that we had some day trades in there, but the bulk of the growth, the bulk of the account growth that I showed you were swing trades. So are swing trades more actionable for folks who are just doing other things? You got a job, you got kids you got to take care of, you got parents, you got whatever it is, right? Of course, not all of us have the luxury of saying, I'm a trader, and park themselves in front of, the monitors here, right? I get that. So it's not just day trading that we do, of course. We do a lot of swing trading. The results that I showed you all in the trades were swing trades. So if you go back and watch that webinar and say, oh, okay, Rog, those were slower paced, longer time frame, something I could get alerted to my phone and then act on it maybe while I'm at the office or whatever. That would probably be what I would recommend. And I would say, look, Hoogly Boogly, you're not alone. I would say less than half of our traders are probably even day traders, probably less than half. I'd say the vast majority, 2/3, probably almost 2/3 are swing traders. And the other style of trading that I love, which is the position portfolio. Those are even slower moving. Those are things you can do with shares or options and leaps if you wanted to, which have even longer, slower process. So there are ways to slow down trading. That's always what I optimize for. I think in a world of trading that is hot keys and get in and get out and fast, I don't ever want speed to be the main issue. I can't get a fill on a trade idea. I actually optimize for slowing things down. I'm never in a rush. And we optimize for setting things up before they reach the trigger. So we actually do a true setup alert. This is on our radar. Now it has levels. This is what we want to do when price reaches a certain price point on that chart. So a lot of what we do is designed to be navigating through the market with forethought and then slowing things down, which I think is something that's really underrated in trading. Slowing things down, not optimizing for speeding things up. All right. Next up. So thank you for the question. Yeah, no, I get it, Hoogly Boogly. I think you would be actually in the majority. You would not be alone. Where some traders say, Rog, I'm kind of glad you day trade, and on the occasion that I can join you in the morning, cool. But it's 1 hour, and even in that 1 hour, sometimes we're looking at managing some of the swing trades and looking at swings depending on the pace of the day trades. So none of my trading expectations are really based solely on day trading. I love to day trade. I always look at day trading a little bit more like a supplement to what I love to do, which is swing trade. But there are times the swing trading dries up and the day trading really kicks in. And there are times right now that the day trading is not great. That mostly probably due to that S&P range that we're continually stuck in. And the swing trading is okay, right? Right now, I don't think anything's performing the way it was in the last 2 months. The last 2 months were pretty great. The beginning of October, it's just stuck. It's very much stuck in the muck. All right. Thank you for the question. All right. Let's see what else we have here. Gregory let's see. And thank you, Hoogly Boogly. I appreciate that. We're in the middle of a class right now. So for those of you that may not know, yeah, we're actually in the middle of a class right now. And even though the class session is done, a lot of traders say, Rog, I like the classes, but I like to watch the replay sometimes even more, because I can sit down, I can rewind, I can pause, I can take a screenshot, whatever it may be. A lot of folks say, Rog, go ahead and do the class. Tell me when the replay is posted. I'll watch it at my own pace. So you can still sign up for our Simpler Trading small account growth plan. It's really any size account plan, but it really is geared towards those folks that are saying, look, Rog, I'm just starting out. How do I get started with the right habits to grow an account, which is why we're all here. So you can check that out. The first classroom session after that immersion that we did. We had a 4-hour deep dive, and then now we're going to have 4 classroom sessions. The first one starts next Wednesday, or I should say this coming Wednesday, right? And which is going to be the 16th. So you still have about 5 days to sign up, watch the videos, the text session, all that stuff at your own pace, and then join me for that first classroom session on Wednesday. All right, gang. I appreciate that, Hoogly Boogly. And Gregory, you won't find a better place to learn how to trade for the rest of your life than in Raghee's room. Oh, thanks, Gregory. I appreciate it. Doesn't matter. Day trade, swing, long term. You will not find a better learning experience, period. Wow. Well, I can't even beat that. So we'll wrap it up there. Thank you, Gregory. I appreciate that. Thank you, everybody, for your time. We've been doing Charts and Coffee now for over 3 years, and I wouldn't be doing it without you all coming in with your questions every day. I'll see you all on Monday. Yeah. Let's keep it going. Heads up for today. End of the week can be tricky. And let's see if we can't get out of this range that we continue to be stuck in. Be good to each other, gang. I'll talk with you soon.